everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the weekly recap of October 23rd through the 27th. We're going to be covering the S&P 500, the Dow Jones, the NASDAQ, my portfolio, and then some winners that did very well this week. We're going to be talking about a couple stocks that had a nearly 5% gain. We're going to be talking about a couple stocks that had a negative 5% loss. And then that is basically it. So I make these videos for sort of historical references from week to week to kind of keep track of both the indexes that I kind of compare my portfolio to and then my portfolio change. So I think that's a fun and interesting kind of style, and hopefully you guys would agree. So if you are brand new to my channel, I do make stock market, financial, and investment videos weekly, so do consider subscribing to my channel for additional videos. So today we're just going to be covering our three indexes. We're going to be covering a few stocks that had really good gains and had an increase of over 5%. So we're going to be covering the index S&P 500 first. So the S&P 500 had 3 out of 5 positive days this week. They had a 5-day change of 0.23% and have gone up 15.29% year to date. So they have done really well this year. Their big winners for this week were at Triple M and a few others. I know Triple M released really good earnings, and they affected both the S&P 500 and the Dow Jones on, I believe it was Tuesday when they released their earnings, but very well. So they're still in third place for year-to-date increase. You know, they're only at 15.29, whereas the Dow Jones here, which we're going to be covering, they're up 18.58% year to date. They were positive 3 out of the 5 days, same as the S&P 500. They had a 5-day change of 0.45%, and their biggest day this week was Tuesday. So yeah, Tuesday, I suppose, is when Triple M released their earnings, Caterpillar released their earnings, a few other companies within their sector released earnings, which had a very nice increase for as far as the index goes. They did come back down a bit on Wednesday, then picked it back up Thursday and Friday. And then the NASDAQ here, they were negative. Well, they were positive 2 out of the 5 days. The negative days that they actually had were quite large, 0.64, 0.52, and then Friday, man, out of nowhere, they had an increase of 2.2%, leaving them at a 24.49% difference for the year to date. So very nice. I'm still curious as to whether the Dow Jones will kind of catch up in the next 2 months with the NASDAQ or what will happen. I don't expect a pullback in the Dow Jones yet. You know, I've read some other investors out there considering possible pullback within the Dow Jones index just because this is another record high. You know, it ended high last week and then it's continued to end high this week. I don't believe they should have another pullback just because these highs that they are actually receiving is because the companies within those indexes have done well. The companies that release terrible earnings report, they suffer and go down, but some of these stocks that do very well, such as Triple M and Caterpillar, Cisco, have done really well for the index, and that's what's kind of causing it to go up. So the very first stock that we're going to be covering that was positive this week is Intel. So they had an increase this week of 9.82%, and this is actually one that's inside of my portfolio. Unfortunately, I didn't cover much of my own portfolio. You know, I should have read a bit more for what happened, but this week has been pretty busy. I was building my new computer, which I recorded videos of. I just have not uploaded them. I got a brand new computer that I'm putting together, and we'll be kind of swapping over to that here shortly, so that's kind of interesting. But Intel, looking at it here, it is up 9.82% in the 5-day change. Year to date, it is up 22.42% year to date. Microsoft was in second place as far as winnage. Oh dang, I closed out my Intel tab. Anyways, they're up 5-day change of 6.34%. Year to date, they are up 34.87%. This is another stock that is within my portfolio, and I'm actually going to go ahead and bring Intel back. Let's see, Intel. 1 second. I guess I could pause and do this, but it's very quick to just look for the ticker Where is Intel? Okay, okay, there it is. It's back. But I'm going to be talking about it here in just a second. Let's see. So we covered Intel or Microsoft. It's up 6.34%, 34.87 to date. They have had very nice earnings. There was something I was reading about them. Their Azure, their cloud business has been doing very well. So the third winner of the week is Triple M. They had an increase of 6.06%. So they had their earnings report released, it looks like before Tuesday opening, had a huge spike of nearly 6%, probably around 5%, and then continue to move up during the trading and then kind of balance itself out, ending at about 6.06% for the week. So very nice on Triple M. This is a paper company. I believe I held them for a while. I believe they're, if I'm thinking, I think that might be IP. I think I'm thinking of another company. Anyways, very good company in the Dow Jones. Caterpillar, again, they released very good earnings on Tuesday prior to the market opening, which caused their stock to increase by 5%. They had a bit of a pullback, not really a pullback, but they rebalanced themselves out, hit their support line as far as for where their new earnings were going to be, and continue to tailor it off with a 5-day change of 4.91%. And some of the losers for the week, oh no, we're still talking about some winners. So Nike, this is one that I didn't expect, especially with Foot Locker and the Under Armour kind of going down, being in that retail sector. Nike, they had an increase of 5.47%. This is actually one that I had taken a look at. I'm not huge into Nike shoes myself. I know people like to collect them. They think it's kind of it's a, I wouldn't say a luxury item, but they're one of the higher branded shoe brands that are out there that people are, they buy it for the brand, not so much for the quality. I suppose they have good quality. They're just not a shoe brand that I have actually bought in the past too much. Anyways, let's see here. So they did have an increase of 5.47%. This week they are up 10.09% year to date. Now, some of the losers for the week were General Electric. They went down this week 12.76%. So huge losses on Monday and Friday, with some putting in between to cause them with a 5-day change of negative 12.76%. Some investors out there are considering investing in GE. I would not. That is just my opinion, but they do have a low price to book value. These are just kind of value traps. Their earnings have gone down this year compared to last year's earnings, and they're not. Anyways, let's see here. Merck and Co. They are also down. They're not quite as far as GE, but they are down 8.83%. So they got hit in the gut towards the end of the week here with a huge loss, mainly on Friday, of 8.86%. So I'm not sure of how this percentage is being recorded. If Friday alone they lost 8.86, and then they lost Monday, Tuesday, Wednesday, Thursday, I believe this number should be a bit higher. So they lost 8.86 on Friday alone, so not sure. And then the final loser of the week was IBM. So this could be a good buying opportunity in IBM. It still has a really high price to book value. The PE ratio is pretty low, but just price to book. We're going to be talking about that here in just a second. So IBM, they had a bit of a loss Monday, Tuesday, Wednesday, and increased slightly on Thursday and Friday. I'm not sure what IBM is kind of shooting for in the future. I had looked into them, adding, to add them to my portfolio. They looked like an interesting stock, but I was still kind of waiting for them to kind of topple down a bit more, and I have to look into the stock as to what they're actually doing. I have to look at their past quarterly and look at their last annual report, which should be coming out again shortly, so I may look into that, kind of just wait it off. Anyways, so one thing that I'd like to talk about is just the price to book value, price to book ratio, and it's basically just a ratio that I use in some of the stocks that I purchased in the past, and it's a market value, and it compares it. It's see, how would I say it? It's basically a calculation of the, if you divide by the current closing cost, so it's $44.40, and then you take their last quarterly book value and you divide it per share, and then you get the price to book value. It's also called the price to equity ratio. And another like quick and easy way of assessing the company is you look at their balance sheet and you take every single thing that they have going for them as far as their let's see here, just all of their assets, and then subtracting their depreciations and their losses, their liabilities. That's a better way of doing it. And then if they have a price to book value of under 3, value investors would then consider it the price to book value of under 3 as a value buy. So this one is at a 3.17, so it's still not, 1 for 1 is where if they sold off if their assets are exactly equal with their liabilities. So in this case, their value on their balance sheet is not quite equal to their liabilities. They're sitting at a premium of about, let's see, 317%. So if it was 1.00, their assets would completely match with their liabilities. But a lot of these companies here, you can see that Microsoft has a price to book value of 8.92. And all you have to really do is just kind of get rid of the decimal, and that's kind of the premium. So Caterpillar, for example, is 6.15, so it's 615% premium. So if it was 1.0, that would be 100%. You would be paying, the current price would be worth what the book value is currently at, the value of their assets. But Intel is a good, it's near value. Microsoft's a bit high. Triple M is 1,360% premium, and Caterpillar 615, Nike 741, GE 240% premium. So it looks like a bargain, a value buy, but definitely do your research on GE. And then this is Merck. Yeah, Merck is 3.99, so 399% premium, and then IBM is still 797. So a lot of these stocks on the stock market, they say that they're overvalued just because that their price that's on, that the stock is currently trading at is causing their book value to be inflated. So that is kind of an interesting thing. So before I ramble on too long, that'll be it. I'll be closing out the video there. So if you have enjoyed the video and liked it up until this point, remember to hit the like button below. If you are brand new to my channel and have not yet subscribed, go ahead and hit the subscribe button below. If you have any questions for any of the stocks or indexes that I cover, if you would like to see one covered in the future, go ahead and leave that in the comments below. And of course, if you just want to say hi, go ahead and leave that in the comments below, and I will always reply back to you guys. Thanks for tuning in, and I will see you next time. Bye.